Well, over in the United States, stocks paired losses late on Wednesday, but the Dow and the S&P 500 still closed lower as problems at Credit Suisse revive fears of a banking crisis, eclipsing bets on a smaller U.S. rate hike this month. The S&P 500 lost 0.7%. The Nasdaq Composite gained 0.05%, while the Dow Jones Industrial Average fell by 0.87%. The JSE is mixed at this hour, the all-share index slipping by 0.25% to 72,708 index points. Markets in Europe are all trading higher today. The rand is trading at 18 rand 40 to the dollar, 22 rand 17 against the British pound, and 19 rand 51 to the euro. Gold is trading at $1,919 and platinum at $967 per ounce. The price of Brent crude oil is at $74.46 a barrel. Well, to break everything down for us, I'm joined by Bright Khumalo. He's from Vestact Asset Management. He joins us now. Very good afternoon, Bright. Of course, all the talk is about a banking crisis. Do you anticipate or foresee that we're going to see a banking crisis of the magnitude of 2008? And why do, banking problems in the US somehow now impact sentiment in other parts of the world, when obviously people's fundamentals are so different?
Yes, we live in a global society, and this is a perfect example where if there's cracks in the system, in this instant, in Silicon Valley, which is a very small portion of the United States in Southern California, can affect, I was listening to the lady that was speaking earlier and Richard Kimber saying, it's affecting markets all the way through to Asia and, the UK, Europe, and obviously we are affected here. We're not special, and not by any means. But to answer your question on whether this is, this crisis is, the same as the one of 2008, I must say I was very young. I was not there in 2008 to actually experience the crisis. But from what I've learned and through, a lot of data, that you can, pull from the past, these are very different crises. This seems like a dumpster fire of Silicon Valley Bank, and other banks that had, similar structural issues, by having those fixed income books and not being able to liquidate them fast enough to get, what they're worth so they could meet the deposits of their clients. So it's not as if, there was an excess of some sort where, they were giving free money or, or loose lending criteria to people with no income or no jobs. So this is not that type of situation. But since it's also systematic in a way, because interest rates are going to be rising across the spectrum, they might be falling currently in Asia, but eventually they'll also catch up. Let's see if any of these banks will be prepared, to meet, deposit requirements when push comes to shove, or they will have similar issues that we see from SVB, First Republic Bank and all these US banks, and now recently Credit Suisse.
Yes. Now, just to speak to that issue, that these banks, some of them have different issues. As you say, with SVB, it was a problem of them, accepting people's deposits, which is effectively them borrowing from the public. And then when people wanted to draw on their deposits, they were not able to give them that money quickly enough because they invested the deposit in long-term bonds. So that was their problem. With Credit Suisse, we know that they've been having problems for a while. We've been hearing negative headlines about that particular bank, which is an important bank. It's described as a systemically important financial institution. It's been having problems for a long time, and this predates the SVB problem. How worried should we be about Credit Suisse and the impact that it's going to have on global banking? And to what extent might it affect South African banks? Because obviously we do borrow money as well offshore.
Correct. I mean, you're only worried about Credit Suisse now, you're late to the party. If you go to, I tweeted this morning their share price, their all-time share price. I mean, they started having these issues way before 2008, and they quite frankly never recovered from the 2008 financial crisis. So if you're a long-term investor from this, it doesn't matter how patient your capital was, not made any money. And quite frankly, I think, yes, if they let this one fail, it's going to be very hard, as you know, there'll be repercussions across the spectrum, you know, from investing and all the people that use them as a prime broker, you know, the ETFs and all that type of stuff. But I'm pretty sure this bank can actually be dissected and sold separately, or trade as, you know, different individual parts to, you know, to try and maintain less pain as possible while they let it fail. I mean, if this bank couldn't survive, you know, Arab money, because Arabs have been throwing money at this thing for longer than 10 years and it hasn't turned the corner, I don't think any money is going to survive here.
Yeah.
Not even the Swiss and the $54 billion US, it's not enough.
One last thing, Bright, before I let you go. The markets seem to be turning for the better today. We see markets in the green, but the banking crisis, or the fear thereof, still remains. What's changed?
I don't know if you're referring to local or offshore markets, but local markets, we've basically been down. I think it's close to 8 days in a row now of red. The last time we saw green was the 6th of March, which is, I don't know, it was a Monday, I think. And, you know, that was the last time we saw green in our screens. But if you talk about global markets, I think the narrative is still, you know, yo-yoing around, you know, the one side being, the central banks are going to have trouble, you know, increasing rates further, because we're seeing that these banks need a little bit of reprieve, and increasing interest rates is not going to give them any of that. It's actually going to have the opposite effect. Whereas, like you say, maybe in the US for now, the banking crisis just, you know, isolated to regional banks and not the rest of the markets. I mean, as I stand here, I look at the big tech companies like Amazon, Microsoft, Visa, and the likes, you know, closed up sharply yesterday, because, I mean, that indicated a turn in sentiment to say maybe not increasing interest rates, you know, by further amounts, or maybe not even by 50 basis points in the next coming meeting, is great for these companies. And we'll take any good news from that. But for banks, I think something big needs to, you know, turn around for them to see, you know, better days.
Bright, thank you so much for your time and insights, as always. Bright Khumalo, he's a portfolio manager at Vestact Asset Management.